Risk-taking remains one of the key driving factors of business, in spite of the potential costs. That's according to a review of risk management and corporate governance conducted by the Organisation for Economic Cooperation and Development, which reviewed 27 jurisdictions. It suggested that businesses should ensure that their corporate governance principles take all potential risks into account and insist that they're managed well and communicated promptly if need be. The review found that the cost of risk management failures is still often highly underestimated, including the amount of time it takes to fix a situation. It noted that ever since the financial crisis, businesses have been more cautious about risks and the potential level of damage these could present to their business. However, this is most prevalent in the banking sector and where companies have suffered serious consequences from risk management previously. These industries and companies are, overall, the only ones that demonstrate extra caution about risk management in changes to formal procedures. The majority of companies believe that risk management is for the line managers to take charge of. Many companies are reducing the incentives available for employees who take risks. This is in response to pressure from shareholders and the public. The OECD suggested that there should be incentives offered to employees for business success, as well as awareness of and effective risk management. Where companies do have risk management controls, however, these tend to focus on audits, internal control and financial risk instead of identifying risks and comprehensive regulations on how to manage these. OECD suggested that corporate governance should take strategic and operational risks into account and consider both financial and non-financial risks. It added that there is scope to make governance of risk more operational, as present, the majority of principles are only focused on the highest levels of businesses. These principles also need to take into account the kinds of risks that can occur both within and outside the company itself. This story was brought to you by QBE, the business insurance specialist.